Our guest host today is Francesco Destratis, investment advisor at Ord Minnett. And joining us for his take on the climate change debate is Andrew Wilson, a carbon markets analyst with Carbon House, a privately owned carbon consultancy company that works with business to develop carbon management strategies. Andrew, thanks very much for your time today. I suppose just to start with, can you tell us a little bit about Carbon House?
Yes, certainly. Carbon House is a privately owned carbon projects advisory and training firm. So we work with businesses, individuals, small to medium enterprises and governments to develop innovative and holistic carbon management solutions. So this is everything through to doing your basic carbon footprint, developing a strategy for reducing your emissions, then developing offset projects and purchasing offsets to reduce your company's emissions, either voluntarily or under a scheme such as a carbon tax or emissions trading scheme.
Let's talk about some of those solutions, some of those strategies. I mean, when you design them, when you shape them, are they very specific and unique to a particular client, company, sector, industry?
Yeah, absolutely. You really need to look carefully at each individual circumstances. Different industries obviously have different things that are unique about all the businesses in that industry, but in order to accurately tackle these kinds of problems and to develop solutions that are going to work and that are going to be cost effective, you need to look at each individual's circumstances, and that could vary from everything, their size and the nature of their operations, their cash flow. And it's really a collaborative process with these organisations in order to develop a plan that's going to work and that's going to achieve the maximum outcomes for the client.
So what kind of solutions, what kind of strategies do you offer?
Well, the first step for any organisation or individual, even in this circumstance, is to, number one, understand their operations and measure basically their impact or their likely impact. So in this case, that might mean developing a carbon footprint to understand where your emissions are, what quantity of emissions you have, and whether or not those emissions, in the case of, say, a carbon tax, mean that you're going to be liable and have to pay money for those emissions. After that, it's then starting to look across your organisation for things like the low-hanging fruit, the cheap and easy initiatives that you can implement to reduce your carbon footprint, as well as saving your business money. The next step from that is then to look at options such as the purchasing offsets and other green power and renewable energy and things like that. That really is a secondary step after you've looked in-house for the most cost-effective ways to reduce your organisation's footprint.
Andrew, Francesco here. The current proposed policy in Australia is that we're going to a carbon tax and then going to a more market-based trading scheme. What sort of impact will that have on Australian companies going from that tax to a listed or a trading scheme or a more market-based scheme? And what impact will that have on their financials?
Certainly. I think it's a really great question, and I think the first step is just to price carbon in the economy full stop, whether that be through a carbon tax or an emissions trading scheme. And once these organisations begin to see a price signal for their emissions, that's where the greatest kind of change and the need for reform is going to happen. And just speaking from our personal experience at Carbon House, we deal with a lot of clients who are kind of sitting on the fence waiting to see what happens before they make that big jump into the transition to a lower carbon operations and looking at those kinds of steps that I've just talked about. In terms of the transition from a tax to an emissions trading scheme, the biggest impacts, I suppose, will really be yet to be seen. It's going to depend on factors such as how Australia's trajectory towards our 2020 target of 5% emissions reduction is going. It's also going to depend on what the fixed carbon price is at that stage, and also what the global marketplace looks like, whether or not we've moved towards global action on climate change by that stage, or whether Australia is still going it alone per se.
Just in the market trading side of things, I believe there are some markets around the world. Are we seeing a lot of speculators enter into that market and try and buy and sell on price movements?
Do you mean by existing markets or the
existing markets,
Australian market?
Existing markets, and what impact that might have on the Australian side of things as well.
Yeah, certainly. I mean, the European market is very well established, and there is a lot of activity that goes on there in regards to speculative trading and forward trading of credits and emissions allowances and things like that. The New Zealand market is also very much developing in that respect over the last little while. And I think that kind of activity is certainly going to influence Australia's emissions trading scheme when we eventually move to one. I don't think so much in terms of a carbon tax. I think a lot of the action and that happens around the trading of credits and similar, I should say carbon credits there in a domestic carbon tax is going to be very much in-house, and that wider marketplace interaction is going to happen after the emissions trading scheme is implemented.
Andrew, when you're talking to business, when you're advising and helping them, do you work at all on a base case in terms of a carbon price?
It's difficult to do at this stage. I mean, everything is very much speculative. It's possible to look at some of the scenarios available and do a whole bunch of scenario modelling for organisations and show them what the likely consequences are after, you know, a $20, $25, $30 price. But there is the kind of range that we'd work on is basically shaped by the policy debate at the time. And I mean, in the last few months, that's obviously been the recommendations of the Ghana Review and the kind of dialogue that's happening at the policy level in federal government.
But there's a fair, I suppose, there's a fair discrepancy, or a lot of room in between where that policy debate is going, from $20 a tonne up to calls for $40 a tonne.
Yes, certainly. I mean, it's a very rapidly moving area. It's not possible to accurately predict what's going to happen. All we can do is work on the best information available, and I suppose, as you know, that's changing almost daily at this stage of the game.
With that, and I suppose with the focus on this, this push and this move, this transition to a low carbon economy, how much demand are you seeing in the marketplace for your services? There are a lot of industry, a lot of NGOs out there just saying, look, we need to get some help on this.
Yeah, certainly. I mean, we've been seen very strong action from organisations purely in the voluntary space. So that's completely separate to anything that's happening in terms of regulatory carbon price and I suppose a big stick being poked at business to do something about this. And we've been working with a great range of clients across all sectors to take some really innovative action on these issues, and that's happening right now, and regardless of what's happening in the policy debate. And I think that's a really great thing.
Is there also, I suppose, not just a case of minimising risk and minimising the cost and impact of a move to a low carbon economy, but do you also look to promote the idea that it also brings with it opportunities?
Yeah, absolutely. That's the fundamental of our business and the approach we're taking to this issue. We view carbon as and everything to do with carbon as not being an individual service. So we see that there's plenty of opportunity to add value to carbon. For example, we do a lot of work with Indigenous communities and local land care groups to develop carbon offset projects and revegetate and restore the natural environment. And the carbon component of those projects is simply one source of value that is being created for the client. And there's plenty of other opportunities for environmental, social, cultural and economic co-benefits in these projects. And the companies that succeed in this coming time are going to be those that can realise that and really leverage those opportunities. And
how do you think we compare, I suppose, on a global stage, not just in terms of our progress policy-wise, but also the progress that industry has made and realising the opportunity and the need to cut down emission?
Yeah, certainly. I suppose looking holistically, we're in the same boat as everybody else, and until we have a regulatory stick being poked at companies in the form of a price mechanism for carbon in the economy, there's always going to be companies that don't want to move until they're forced to. But I think we're seeing a great number of companies, and especially through our work, that are really keen and active in this space to take action on climate change. And I think that's the story around the world. It seems to be there's a vocal majority who are talking about opposing this kind of action, but really the silent majority understand these issues and are moving towards them. But Australia also has the challenge of being a very carbon intensive economy. So in that sense, we're almost one step behind the rest of the world and have further to go.
Andrew, you're obviously working across a number of industries. Which industries are you seeing that are going to have the largest impact upon their businesses, and how are they going to offset that?
Yes, certainly. I mean, the easiest way to answer that question is going to be to look at the current emissions profile of Australia and look at those industries that contribute the greatest towards that. So that's the mining industry and the steel manufacturing industry, etc. In terms of the raw numbers, those are the guys who are going to have the biggest impact of any kind of carbon tax. Then again, saying that, there's also going to be a whole package of, likely be a package of assistance provided to those industries. How they're going to deal with those is really up to each individual business, and the approach we advocate is acting early as possible to do that. So that's first measuring what their emissions are going to be that they're liable for, developing any kind of strategy they can to reduce those emissions, whether that's adoption of cost-effective low emissions technology. It could also re-looking at the structure of the company and the way that operations are done, and that also at the end of the scale is then the purchase of carbon offsets or development of carbon offsets to reduce the bottom line of the emissions tax that they have to pay.
And in your analysis, you're looking at some of these industries that are going to get assistance. Is that going to force them to actually reduce their carbon output, or is it they're going to get assistance and they just won't change their habits?
Yeah, it's really hard to say without seeing the final design of any kind of assistance scheme. But I mean, at the end of the day, the assistance is being given to these industries because the full impact of a carbon price would just be unbelievable. They're still certainly going to feel the impact of a carbon price regardless of any assistance, whether that be 80%, 90% of their credits for free. They're still certainly going to feel the pinch of a carbon price, and that is certainly going to hopefully drive innovation and a move towards low carbon technologies and a lower carbon output of their products and services.
Francesco, from a market perspective, I mean, how much is, I suppose, this uncertainty that we have at the moment in terms of, as Andrew says, you know, the final detail of policy and so forth, how much is that a question mark over investment, and how much does that rattle the market?
Well, it's definitely had an impact upon the steel manufacturers, One Steel and BlueScope in particular, and the market's pricing in, you know, probably almost the worst case scenario, and that is that they're going to be paying more, number one, and number two, their higher cost of production means they're less competitive with their product, and therefore they're competing against much more competition with imports. So the steel manufacturers, you know, they're looking pretty dire at the moment, and then, you know, the mining companies, not so much of an impact there because a lot of their product is obviously being exported. So, you know, whilst it will impact, I think it will turn into some pricing impacts on the commodities at the other side of it as well.
Is one of the keys, though, I suppose, the uncertainty, as we talk about ad nauseum. I mean, that is one of the key things markets simply don't like.
Definitely, markets like more and more certainty. The happier the markets are, and if there was pure certainty, then the markets wouldn't be as exciting as they are, I suppose. So yeah, look, when there's more and more uncertainty about how it's going to be implemented, at what level it's going to be implemented, people just don't want to be in that position. You're going to have risk takers or large risk takers that will take positions in these stocks in the hope that it won't be as bad as the market has anticipated and there'll be a bounce back. Because ultimately, you remove all this noise, One Steel and BlueScope look very cheap on a fundamental basis, but you put into place that impact upon, you know, their products and their competitiveness, and it turns into being looking, well, maybe they're still a bit expensive, or maybe they're fair value where they are.
Andrew, I suppose when looking for that certainty, a lot of it comes down to policy and so forth, and government legislation and action and so forth. How do you think the debate is framed at the moment? I mean, there still seems to be some people debating the science of it, let alone actually getting some sort of a market mechanism and getting some sort of a carbon price. And is that almost halting the advancement to an extent?
Yeah, it's certainly easy to get that perception looking at the headlines and I suppose the noise of the media and all of the sound bites that are coming out regarding this in a political sense right now. But if you strip back all of that distraction at the bottom fundamental level, the progress is still being made towards pricing carbon in the economy. All of the steps are being ticked off, moving towards that. And at the end of the day, I think the progress is still on track for what the government is intending to do. Whether or not they can pass that politically is another question, but there certainly is a lot of uncertainty being driven by, I suppose, the vocal aspect of the debate, and that is having an influence, certainly.
All right, Andrew. Great. Thanks very much for your time today. Appreciate it.
Thank you very much.
Andrew Wilson there from Carbon House. Now we are going to head to a break.